Hi everybody, RJ Baxter here, Fairway Independent Mortgage with your weekly market update. And I apologize in advance if my camera's a little bit wobbly. I don't have my tripod with me right now, so I'm just holding it with my hand. But regardless, let's get into it for the market update. And I wanted to talk this week about the big headline of the week, and that is the inverted yield curve. What is the inverted yield curve? If you haven't researched this or read about it, what this means is that banks are paying a higher yield on short-term investments than they are on long-term investments. Specifically, the one that the media has keyed into is they're paying a higher yield now on a 2-year investment versus a 10-year bond or a 10-year investment. Excuse me. We've been inverted for quite some time on other maturity terms like 5-year versus 10-year, for example. But this week, for the first time in something like 11 years, the 2 and the 10-year inverted. And this is important because this has been an accurate precursor or predictor of an impending recession for the last 7 recessions. So if you do the math on the 11 years ago, the last time this happened, that was right before the housing crisis in 2008. So the media keyed in on this and it was all over the headlines. The inverted yield curve, the Dow went down a little bit over 800 points on Wednesday on this news, the largest single day drop for 2019. And we'll see if this happens. We'll see if the recession follows. But it seems that with some of the headlines that are going on right now, with the trade wars, with some chinks in the armor with the economy, that this could be something that could take us over the cliff to head to recession. So what does this mean for real estate? And what does this mean for you and your buyers? What this means is that during a recession, usually interest rates go down, and this is very interesting because rates are already extremely low. We're almost to the low points that we saw several years ago when we got, for example, on a 30-year fixed into the mid to low 3% range, and we're already close to that level. So what's going to happen here? The economy's supposedly chugging right along. The Dow is still up there despite the recent drops, and a lot of the headlines are that the economy is still really good, yet rates are pretty darn low. We just saw a Fed rate cut recently, and that led to a little bit lower rates yet. Now, if you've watched some of my previous market updates, you know that a Fed rate cut is not directly correlated to a lowering in mortgage rates, but that did happen because of the perception of the rate cut, that they're starting to worry a little bit about the economy. Trump even called, when the yield curve inverted yesterday, called for an emergency Fed meeting and rate cut, and has been critical that the Fed hasn't cut rates enough to help stimulate the economy and keep us moving along and not going into recession. So that part of it's very interesting. But long story short, rates are down right now compared to a couple weeks ago. After the Fed rate cut, it went down. Yes, this week it went down a little bit, and we're seeing extremely low rates, and it's likely to go lower yet if we go into a recessionary environment. So what this means is that with lower rates, more people qualify. It makes mortgage payments more affordable, and it makes it more attractive for people to buy a home versus renting. So this will be, it could be actually a stimulus to the housing economy. And what we see a lot of times in recession environments is after the initial shock of it, a lot of times housing is strong in a recession or stronger. So this could be something that we see if the economy goes into a recessionary environment and rates in fact go down. So it'll be something to watch closely. So we'll see how this thing plays out. It's not an instant thing where the yield curve inverts and we instantly go into recession. It takes time. It's typically a 12-month lag, something like that. So we'll see how this plays out. Very, very interesting. But if you have questions on this, just give me a call. I'd be happy to discuss it with you, answer your questions, and to see how this might affect your specific buyers. So I'm here for you. If you need me for any pre-approvals or loan-related questions as well, my name is RJ Baxter, Fairway Independent Mortgage. Thanks for watching, and you guys have a great rest of your day.